Good morning, gang. Good morning, good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's just for educational purposes only, and it's my view of the markets. Now we've got that out of the way. I'm going to keep this week really short and sweet, guys. I'm feeling rather under the weather. So obviously, if you do appreciate the free content, even when I'm dying, let me know down in the comments. Smash that like button for me. Right, here we go. So, what's happened since last week? So the last time we had a conversation would have been Thursday. Price would have been down here. Okay, and it was really simple. The tier that I've been sharing with you guys and on Twitter, if you follow us on Twitter or X, you know that everything's been rather simple. I've not overcomplicated things. I've kept things really, really quite simple. And that's how trading should be. Especially when you're looking at a high time frame environment like this, you should keep this really simple. It gets a little bit more technical, a little bit more complex once you start zooming in and you're actually trying to find entries for trades, and then you're psychologically difficult because you're then managing said trades once you're in them, etc, etc, etc. However, on a high time frame, it's quite easy to see with this. So we were down here. The two options realistically from here is we either push up into value area low. At value area low, this is the main resistance, okay? And that's value area low of this whole range, and this whole range that's realistically been going on. Let's take it from the top for, 111 days now? Okay? So it's a long range, you know, over 3 months in the same range, okay? So the question was, do we get acceptance into value or do we reject? What did we do? We reject. Low time frame, we had a very, very nice setup, okay? And then if we reject where we're looking for, realistically, we're looking back down for range lows, okay? Did it have to come to range lows? No, there were SR levels in between here, the golden pockets, etc. But quite frankly, it had zero reaction and just continued to roll over to where we are right now. Obviously, if we'd have got acceptance back into there, then I'd have been looking for a push up into the range EQ / the point of control, because that's the next major resistance to the upside, okay? Now, what have we done? We've come back down. Now, yesterday, we came back down to range lows. Today, we've pushed through range lows and we've taken out the lows from the 24th of June. Okay, that's quite significant now. So the big question now becomes, what's happening next? Okay, again, I'm going to keep this really simple. I'm going to zoom in to a lower term time frame. Let's zoom into the 4 hour. Okay, I'm going to keep this really, really simple. Once this volume profile decides to wake up, and there we go. Thank you. Right. While we are down here, we are stuck between two major levels. Number one being these dominant lows from May the 1st. And number two being the range low. Okay, within this gap here, I have no interest in trading. Low time frame or high time frame. I have no interest in trading. Now, why I've got no interest in trading? Okay, first and foremost, you've got your support down here. The local support. Is it strong support? No, I don't believe it is, but it's your local support. You've got your local resistance above us. Right now, we're around the EQ. Okay, treat this as a standalone range. I do not take trades from a lower time frame EQ. It's pointless. Okay, because you're just taking a gamble. 50% goes that way, 50% goes that way. Nobody knows. Nobody knows. Okay, so for me, for this range to hold, I need to see a reclaim of range lows. Now, whether that means get ass back up here, start to change some local market structure, hold the range lows, and then we have a push up, then great, cool, I'll become a bull again. And that just means a bull in context of the range, okay? The other option would be, comes down, takes the lows, then gets the reclaim back into the range, showing some strength once again. Then once again, I'm just back to trading this range. This is the thing, and you'll see this with sentiment on Twitter right now, is when we are up here, or up here, or up here, everyone is talking about 100k or random numbers, normally round numbers, because, you know, it's a very simple environment, is Twitter, let's be honest. Very simple people. Everyone gets overly bullish at range highs. Now, we're back down at range lows. Okay, we're back down at range lows. What's happening now? Everybody is uber bearish. Okay, this is where the psychology needs to flip. This is where you can tell when someone's a trader or when someone's not a trader. The lower we come, the more bullish I get locally. I'm not talking about full-on permable 100k and all these random things. I'm just talking about when it comes to trading, the direction that I want to take to trade. I don't want to be shorting down here. Could it break down from here? Could it just drop? Yeah, it could. Could. But that doesn't give me a good risk to reward. I'm more than happy holding a short from up here, a short from here, and a short from here. Because you take shorts at resistance. You take longs at support. Okay, just like we did on this one here. Lost the range low, reclaimed, bounced up. Okay, this is where the majority of people go wrong. So, effectively, long story short, I want to see that range held. I want to see a reclaim with some market structure break on a high enough time frame, something like a H4 or upwards, and then I'd be interested in taking longs, because that gives me the better risk to reward. Does that mean that trade, if it's set up, it definitely works? No, it doesn't. But it gives me the better setup. Okay? No point in knife catching down here. What's the point? Okay? Now, likewise, this could come down, take out these lows, then show some strength, and once again, back to trading the range. Now, if we do roll over from here, and it starts going lower, taking out this without a simple swing failure pattern, it's exactly the same TA that we've had on for God knows how long now. Where's the volume? Where's the volume? I don't give a shit about order blocks, supply zones, demand zones, or anything like that, because that's not how I trade, okay? I trade based on volume. Where is the volume? Okay, the volume, high volume node, here. Okay, every man and his dog is looking at this because it lines up with all different forms of trading, all different styles of trading. Every man and his dog is looking at this. Always makes me nervous when every man and his dog is looking at a level, but still, it's a valid high volume area, okay? Around 52 down to 50k, just underneath these lows, okay? It's a range. Get acceptance back into said range, we continue trading the range. Eventually, one side of this range will break. Which way does it break? That way or that way? Who knows? None of us know. Okay, we're traders, we're not LARPs. If price continues further down, where's the next range? This range, okay, with the point of control. So we know there's a lot of volume around, call it 43k for easy numbers, okay? So once again, do we get acceptance back into this range? And then we're just back to trading this range. Now this range here, I would say, arguably, is from roughly 46, 47k down to 38k. Okay, trade that range until eventually one side breaks. If it breaks to the upside, great, cool, where's your next resistance zone? We don't know until we see what structure is built on the way down. Okay, we can't crystal ball this. We don't know what the structure is going to create. If this comes down in one straight line, it's not creating any structure, which means if it does bounce from here, it's got a higher chance of going straight back up. But on the other hand, if this just continues to bleed and grind and grind and grind, then we're going to be creating lots of structure. So therefore, its price is going to have a harder time pushing back up in a clean move. It's likely going to zigzag all the way back up again. Okay, same concept as when we talk about when something pumps really fast, it can come down through it really fast because there's no structure being built on the way down. Okay, so that's all I'm looking for, quite simply. Either A, reclaim the range, drive it up, then we're looking at value area low again. Do we get above value area low? Do we get into value? Yeah, great, cool, all right, we're back at the EQ. Do we reject from the EQ? Great, cool, we've got a short trigger. Do we get back above the EQ and start driving up? Great, cool, we're looking for value area high. Do we reject there? Cool, great, another short trigger. Or do we flip that and then we're looking at overall highs? Same question you ask yourself at overall highs. Do we break out? Get back under? Short trigger. Do we break out and continue up? No long trigger. Let it run. Because in that environment, you should already be long from lower. Like I said at the beginning of the video, you don't want to be longing the highs and shorting the lows. It's the opposite of what you want to be doing as a trader. Okay? So it's really that simple. Really that simple. Lose this without any meaningful reclaim down here. Lose this down here to down towards 38k. Lose that, then yeah, we'll talk about that in another video. Okay, right. If you appreciate the free content, then don't forget to hit that like button for me, guys. And until next time, as you were, bye-bye.